Hello financial investors and welcome to the channel. My name is Brent and today is the 8th of June 2020. We're going to go ahead and take a look at stock futures, look at some of the world markets that are up currently such as Japan and China. Then we're going to go ahead and jump over into the M1 Finance platform, take a look at the Roth IRA and what stocks performed well last week and what stocks did not perform well, the overall performance of the portfolio in comparison to the three main indexes. Then we're going to go ahead and take a look at the dividends that were paid out. There was one company that paid out some dividends, and then we're going to be making our decision on what specific company we are buying this week. I do have one in mind. I did have two in mind last week, but both of those shot up crazy this past week. So we'll go over which two I had been planning on buying and why I'm not going to be buying them and why I'll be buying this other company instead. So if you are brand new to my channel, have not yet subscribed, would really appreciate if you go down below, subscribe to the channel. If you do enjoy this video, find it helpful, entertaining, give this video a thumbs up. And if you have any comments or questions, would like to let me know what stocks you are buying, what ETFs you're purchasing, how do you feel about the current market? Do you think it's mainly FOMO? Go ahead and drop that down in the comment section and let's go ahead and get into the video. So currently stock futures are positive. S&P up 0.19, NASDAQ 0.27, the Dow 0.19. So does this mean that there's a recovery underway or does it mean it's more time for stimulus? So that's an interesting article that just got released here earlier today. Now overseas, let me go ahead and refresh this because this is not active. Okay, so there we go. Futures just went negative here. It's about 12:30 in the morning right now. So stock futures still kind of bouncing around right now. So it's kind of interesting. We saw the Japan market. Japan market just closed not too long ago. Maybe about 26 minutes ago, Japan closed 1.37% positive. China is currently active, still positive by 0.12. We can see England and Germany just opened up. England down currently by 0.67 and Germany is basically flat still. So it does show that it's currently active, but it is not either positive or negative there. So we'll kind of see how this kind of plays out. We'll come back to this page here towards the end of the video and we'll go ahead and refresh it and see where it's currently at. And of course, futures only kind of showcase where people are expecting the market kind of go and open up, what actually takes place, what news, what media, what really kind of drives the market that day is going to be a little bit different. Now, when I logged into the M1 Finance platform, they had some sort of a new promo for the upgrade to M1 Plus. I do not have M1 Plus and am not going to be getting it. What it offers you is just one additional trading window. I don't trade that often, and when I do, the morning trading is completely fine for me. I can't do any sort of limit buys or limit sells, or I can't do any stop losses on the M1 Finance platform. So just having that extra trading window isn't going to give me a whole lot of additional options there. If I had options to limit buys and limit sells during these trading windows, that may be something to look at. But M1 Finance isn't my trading platform for that. I use Merrill or Webull or Robinhood. All three of those are linked down in the description below. Now M1 Finance here, they have the ability to have 1% cash back and 1% annual percent yield on your cash sitting in the account. I get a 2.5% cash back using my USAA card, so I'm not worried about 1% cash back when I already get an additional 1.5% on top of that, and that you can earn 1% while having your cash sit in the account. And already there's other accounts out there such as the CIT Bank Money money market account. This one's down in the comment section of all my videos here recently that I've been kind of posting, and what this one's currently offering is a 1.3% account, and this one has been fluctuating, so you want to take a look at either CIT Bank or Ally Bank. I know both of those have pretty interesting. I do think that their borrowing rate is pretty nice at 2%, but that first year fee of $54, basically $55, just isn't really worth it for what you're getting out of this paid product. Okay, so with that said, I'm not going to be using M1 Plus. I know I had a couple comments in the previous videos asking me if I had any, wanted to use the M1 Plus, and that's a solid no. Okay, so jumping over into the Roth IRA now on the M1 Finance platform, we can see that we're pretty positive here. We've had our turnaround here just recently, within like a week or so ago. We can see here that our portfolio is now up about $3,100, almost $3,200, mostly from market gains of 2,000, and then those dividends really kind of kept our portfolio in check. As we went into the downturn, we were continuously getting paid out dividends week after week, month after month, and buying up those shares at cheaper discounted prices. So here we are, rebounded with brand new equity, having been invested during that the downturn here, and those dividends, and we're back up pretty nice and solid. Now, as far as the 1 week performance, this portfolio put on an 8.4% return, about $1,800 in capital gains or just market gains there, and it earned about $27 in dividends that have just not been paid out to the account yet, but it will be paid out in the future. So overall, very positive here, 8.04%. The S&P 500 put on 4.91. The Dow Jones put on a 6.81% return, and the Nasdaq put on a 3.42. So this portfolio definitely put on some gains this week. Now, a lot of that growth, take a look here. This is a 1 week period. Simon Property Group, this is showing it's up 53.55%. I'm not sure if this is actually accurate, but I know both of these companies have been beat up here in the short term, so that could potentially have came up by quite a bit here this past week. So Tanker Factory Outlet is also showing a 43.25% return. ABM Industries, so a lot of these companies grew in the double digits. So just about half of the portfolio here, just all these companies right here and within the little screen here have all grown in the double digits. Now, a couple positions I wanted to buy last week are WP Carey, which increased by nearly 15%, and the other one was UGI Corporation's utility company here. It rose by 12%. So this is something we'll kind of discuss here in just a minute. Now, the worst performing companies here this week, Pfizer down to 5.76%. That one is interesting now. We'll kind of see how it is in the portfolio. It's actually negative now, so it kind of came to my attention. Walmart down 2.02. Digital Realty Trust, that real estate investment trust for the tech centers, down 1.59. Johnson & Johnson and Kimberly-Clark, they're also in the negative. So really not a whole lot of negative again this week. Pretty crazy here with the market, what has been happening. Now, as far as the activity this past week, we did have some activity on Monday, the 1st of June. We did do our stock buys. I purchased Genuine Parts and Lancaster. Both of these have moved positive here over the trading session. And then I did have some leftover. No, I had Walmart that paid out $3.50. So in a couple videos ago, maybe a month or so ago, I made a video on how to split your stocks, individual stocks within your account, over into their own pies, and I had shaved off about $60 of value in order to create a REIT pie and threw it in this portfolio. Well, I kind of removed that REIT pie, so that's why it's kind of showing that $3.50 here, the activity here. I had one buy of $3.50 going into Realty Income. That was done by selling the equity within the pie and taking the current dollar amount of $3.50 and then pushing that all into the individual holding of Realty Income. Whoops, right there. So we basically just transferred all the cash back into the individual holding instead of having some of it inside of a pie within the portfolio. I like to have all the stocks out in the open. That way I can just quickly kind of glance down at my phone or on the computer and just kind of see how the performance is doing for the individual companies on the day. Or when I'm kind of looking at it like this on a weekly basis, how did each stock within the account do, and not have to go down into the pie to see the individual holdings. That's just an extra step I didn't really want to have to do. So that's sort of the activity for this week. And then we just had a dividend that was paid out from Pfizer of $7.72. And we deposited $50.23. So between the dividend that was paid out and the cash that we deposited, we have a cash balance of $57.95. Okay, so with that said, let's go ahead and jump over into the spreadsheet here. Now, last week I had specifically set aside a couple companies here by the ticker symbols I thought I hit F11. That's fine. Okay. I did specifically set two companies that I wanted to make for this upcoming week. I do need my tabs up top in order to see this, so I'm going to go ahead and cancel out of this. But I had set UGI and WPC. Well, UGI goes ex-dividend in 3 days and 23 hours. So that's actually on the 12th. The 12th is this upcoming Friday. So I would have had to have purchased it either Thursday or prior for it going ex-dividend. But what took place this past week? Well, if we take a look here, UGI made a massive upswing of 12.09%, putting it back into the positive. So it was negative around 6%, 7% last week with that 12% upswing. It's now positive in the portfolio by 3.03. It's not bad. I would like to actually add into it. I just don't want to average up. So maybe I'll have another opportunity here in the future as the market kind of cools down, the FOMO retracts, people get a little bit anxious and they start selling, for UGI Corporation to kind of come back down into the negative, where I'll go ahead and purchase it. There's another company here that's actually negative, where it may end up being further negative here on Monday if futures are showing a little bit more red. So the other company here, so UGI, currently positive by around 3-4%, so I'm not going to be buying that one. The other one here, WP Carry, remember here in the portfolio, I keep clicking on that link. I'm going to go ahead and close that one down. WP Carry, right up at the top, up nearly 15% this week. That put it quite a bit in the positive. So if we look here at WP Carry, it is now up by 12.44%. So it was negative in the portfolio by maybe 2 or 3%. And with that 15% upswing, it went into the positive by 12.44%. So it has been put on a hold status at the time being. It is going ex-dividend, I believe, here very shortly. If we take a look here at WP Carry and move down to, they rearranged this page. I really like the way that they had it in the past, and now they changed it on me. So let's see, this one generally goes ex-dividend around June 27th of, on the 27th of June. Right around there is when this one goes ex-dividend. It hasn't been announced yet, otherwise you'd see it up here at the top. It does offer a 6.24% starting yield, so that's very nice for WP Carry. Is that correct? Yeah, 6.05 right there. I have a starting yield of 6.8, so I bought this one at a nice price. So I'm going to go ahead and wait on this one as well. Maybe we'll see some REITs kind of dive back down. My O position blew up nearly 33% in Main Street Capital. I'm really happy I bought into those at the time that I did. I just, everyone wishes they had put more equity. It's too bad that the Roth IRAs have a set limit. It's good for all because it kind of keeps everyone limited to the same playing standards. To get that tax-free money after 15 and a half. But so those initially two positions here are set aside because they're up by a quite amount there. The other positions here towards the bottom here that are negative, only a few of these actually have equity not so close to where I wanted it to. A lot of these have 1,000, 999, 900, 800, 900. So the positions that are coming up ex-dividend that were also negative were such as, I believe it was, let's see here, taking a quick look down here, Pfizer is going ex-dividend in August. That's still a few months away. It also had a bit of a dip here recently. So if I look at Pfizer, it should be coming back ex-dividend around August 1st. So we still have quite a bit of months until August 1st. They just went ex-dividend back in May, May 7th. So we're not going to see that ex-dividend come up again until the 1st of August, which is still quite a ways away. So that one, I can kind of hold off on that one. The other one here was Consolidated Edison. This one here has $525. It is negative, but again, this is another 8-month. So Edison recently went ex-dividend here back on May 12th as well. So that's not going to go ex-dividend again until August 13th roughly. And then Waco Group, which also went ex-dividend. So a lot of these companies recently went ex-dividend. The only one that's really down here in the negative here, we have JP Morgan. So we were kind of looking at the June, anything 6 and 7. So here we had a 6 right here, which is Las Vegas Sands. That's not something I'm too keen about buying at the moment. They did cut their dividends. I'm just kind of letting it sit there in the portfolio for the time being. The other one is Ultra, which is, it has either gone ex-dividend or it will go ex-dividend in June, but it has nearly $1,000 of equity, so I'm not going to be adding any more capital into that one either. So that just kind of leaves JP Morgan, which is right here. Now JP Morgan's only down 0.88%, so it's not down by much, but if futures do continue to fall here, we'll still kind of buy it into the red. We'll kind of average down into it. I'm not adding a large position. JP Morgan doesn't go ex-dividend for the next 23 days, and so it's not going to be going ex-dividend until July. So it's got a whole month ahead of it still. Besides that, there weren't a whole lot of other positions that I've been kind of wanting to add to the portfolio. I did have a watch list down here of a couple companies, but a couple companies that I just have never had the opportunity to really buy into. When I added them to my watch list, they were a flat zero. I had one share. I added them at the cost basis that their price value was at the time, and I just kind of held off either way too long or not long enough. And we can see a few of these positions, mainly financials, are kind of still low. I had done a little bit of research on these. I forgot at the time, which one of those had been the best. And I can kind of maybe do that here on the video with you guys. So we'll kind of bring these in. Maybe I'll add to those instead of JP Morgan. But I know JP Morgan does go ex-dividend here in a few. So we're going to go ahead and take a look at these three. And see how they are currently performing, why they're sort of on the list in the first place. So we'll kind of take a look at each one individually in the current time frame of 1 year, and just kind of take a look at their performance. So Community Trust Bank Corp, ticker symbol CTBI, has a 4.18 starting yield over price at the current moment. This one has a price over yield. The First Financial Corp, Frost Bankers, price over yield. So Community Bank Corp Trust currently offering the biggest discount as far as where the price is currently at. We could also bring the 200-day and 50-day moving average in here. So all of these look to have recently broke above the 50-day moving average. I'm pretty sure, yeah, all of them would have, just with the market recovery here in the short term. We can see that the current price is slightly above the 200-day simple moving average. So either it'll act as resistance. You can see here, it generally doesn't trade above that 200-day moving average. So this one, Frost Bankers, may be, hitting some resistance there and maybe falling here in the short term. This one still has a bit to go up until it hits that 200-day moving average. Community Trust Bancorp still has quite a bit of ways to go as well. Now, as far as their tenure goes with their revenue, net income, and free cash flow, I think that's what kind of drove me to kind of take a look at these in the first place. They're all positive. Revenue up 2.7% on average per year. Revenue and net free cash flow and net income in the double digits there, about 10 to 11% on average per year. First Financial Corp, all positive there with revenue, free cash flow, and net income. And and Frost Bankers, just upwards movement here for these. 7.4% on the revenue. This one had 3.3%. So and Frost Bankers has the highest as far as the digits go. For revenue, up 7.4% in comparison to Community Trust at 2.7%. So this is slow and steady for their revenue, and their free cash flow net income in the orange, 10.0, 9.0 for the net income there, and 9.3 for the net income there. And as far as financials goes, that would be price to book. And take away the percentages here. We'd want around a 2.5 price to book ratio for the financials. So this one's set at essentially a flat value, so 1-for-1 for their price to its actual book value of the company. Here we're getting a 0.9, and Frost a 1.3. So as I said, we saw that the Frost Bankers price was pretty extended, hitting some potential resistance. So we can see the price to book. The other ones are around a 1. This one's at a 1.3. So this one might be just a little bit extended. We can see it did break below 1 for a bit ago. So if we're looking at value, we may be looking at either, again, First Financial or Community Trust Bancorp. And if we take a look at their, let's see here, return on invested capital for these companies individually here, we have anything over 7% is fairly good. So Trust Bancorp, 8.51. First Financial, 9.25. Colon and Frost Bankers, 9.48. So all of those are really good as far as the return on invested capital. You invest capital with them. What is their return with your capital that's been invested? You know, they have a pretty good rate of return there on all of those companies. Assets and liabilities. We like to see assets over liabilities for a lot of these companies. If we try and compare this to some of the larger companies like JP Morgan, take a look at how JP Morgan is. We have $2.6 trillion in assets and $2.4 trillion in liabilities. So, you know, we always want to see assets over the liabilities that it can just kind of cover it. So we can see Colon and Frost, 34 billion in comparison to 4 billion. So it's a little bit larger and 4 billion there. So this one's a much larger, has much more assets to it. And if we take a look at their earnings per share, how has their earnings per share really kind of been over the past 10 years? Now this year, 2020, you know, I think everyone can kind of look at 2020 as a bit of a weak year here. So their first quarter here in 2020, their earnings per share dropped by quite a bit. They were doing fairly well. You know, the first quarter in 2019, a bit of a dip. First quarter maybe in 2018, looks like it rose. 2019 it dipped. Here in 2020, dipped by quite a bit. Let's take a look at First Financial. First Financial is actually doing fairly good. They had a bit of a dip in 2018, but they recovered, moving to the upside. Must have had a really good quarter. You know, slightly increased over the past few quarters. Colon and Frost Bankers took a hard dip here. They were moving pretty steady to the upside. You know, all these companies have been doing a very nice steady upside movement for their earnings per share. A little bit of staggeredness there for a couple of years. We see the double bottom there with their earnings. I don't know if that's any sort of there. And then Community Trust Bancorp. This is one, I think this may have been the one that I had at one point decided I was going to be buying, but I just never did. And Community Trust Bancorp, we can see long-term debt, 58 million in comparison to their assets, or cash and equivalents, 264 million, so quite a bit more on all of these. I think they just all did really well as far as their metrics went in comparison to the big financials. We can see that this cash and equivalents is actually lower versus their long-term debt. So that's why I kind of added these to my list. So back into the M1 Finance platform, we're going to go ahead and just make two stock buys. We're going to go ahead and target both JPM and CTBI, both financials right now. I think that's going to be an interesting mix there. So we're going to go ahead and take $57.26, 57.95 divided by 2. That's $28.95. So the first one we're going to be buying is JP Morgan. We're going to go ahead and not hit edit. That's not what I wanted to do. Hit buy sell. And we're going to go ahead and type in 28.97. Hit continue and confirm. And then we're going to go ahead and add one more financials. I did want to add another financial quite a while ago. I'd like to add T Rowe, but it's just been so priced that I just won't be buying it. So let's go ahead. I'm going to go to Seeking Alpha. Okay, so this is showing a bit more information. So this is why I like to use Seeking Alpha as well. So this one has a dividend yield of 4.23%, 74.88% payout ratio, 5-year growth rate of 4.62, and dividend growth for the past 19 years. So the dividend.com website, I'm not sure what's up with that one. So I do think that CTBI is going to be a good buy and hold for my portfolio. The price is still showing a bit of a double bottom. We did see a bit of a lower double bottom there, but it is showing some upwards momentum with the rest of the market. So we're going to go ahead and be adding CTBI into the mixture. Add it to our basket, hit yes, and we're going to go ahead and give it a single percent because it doesn't matter as long as, you know, I'm the one doing the investing here. So we're going to go ahead and do that. And next we're going to go ahead and locate it inside of our portfolio right there. And we're going to go ahead and buy this specific holding, and it's going to be $28.98. And that is going to be it. As far as our two stock buys, we bought JP Morgan and Community Trust Bancorp over in Kentucky. So let's go ahead and hit refresh, take a look at stock futures going back up to the positive. So it'll be an interesting Monday. Let me know in the comment section below, what do you think is going to happen with this market on open on Monday? Do you think we're going to continue higher? Do you think we're going to continue lower? I'd like to hear your thoughts, and that is it for today's video. If you guys did enjoy this video, give it a thumbs up. Subscribe to the channel if you have not yet subscribed. If you own CTBI, let me know in the comment section below. Do you think it was a company you would take a look at if you were investing in financials? It has been on my watch list for quite a while, so we'll kind of see how this one kind of plays out in the future. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.